Neighboring Uganda today just announced a fifth consecutive drop in its headline inflation, now sitting at 14.3% for July from 18.0% in the previous month. Lucas Ochieng is now with us from Kampala. He's corporate manager at Orient Bank, Uganda. Lucas, many thanks for coming on the program. Why is inflation trending downwards for 5 consecutive months?
Basically, there's been a bumper food crop in Uganda. So the prices have also plummeted, thus the drop in inflation rate to 14.3% as compared to the previous month at 18%.
What is the long-term word, Lucas, on food prices? Will they keep going down because the food is the largest component of the inflation rate?
Yes, food, incidentally, is the largest component of the CPI computation. Then the other factor you could possibly say influence the drop is the price of fuel. Basically, when you see a drop in both areas, because at the end of the day, fuel prices tend to increase, tend to have an effect on the overall price of commodities in the country. But having seen a drop in the price of fuel and food, certainly inflation had to come down.
We're expecting the Bank of Uganda on Thursday to give the latest CBR. It has now sitting at 19%, but do you think there's now evidence for further monetary easing?
Yes, obviously we've seen a drop in the previous couple of months. Definitely we'll see a drop in the CBR rate by Bank of Uganda, because already that is reflected on the overnight and 1 week funds on interbank, trading between 11% to 17%. So given that CBR is at 19%, obviously we should see it come down to possibly 18 or 17.5%. Then that definitely is the objective of central bank. In long term, it kind of beef up private sector borrowing as interest rates
and let's finish.
To boost
Lucas, let's finish with the currency, which is the currency. The Ugandan shilling has been around 2,460 to 2,500 shillings for the past 3 months. Is this likely to lend any support to the Ugandan shilling?
Well, basically, right now, what is affecting, I should say, there's considerable stability in the currency, given that there's very low demand, which tends to come in end of month, really. But given that the yields on government securities will drop, because the auction size has also been reduced to about 80 billion. So we might see some offshores shrugging off our market, and that will definitely impact on the shilling. But certainly central bank is of the view that if the shilling remained stable, it should increase activity on the market. So oftentimes you'll see central bank intervention when there's a sharp depreciation or appreciation.